Good morning, everyone, and welcome to the Quantum Leap morning leap session. This is our pre-market session where we get together and take a look at the market macro macro to micro, look at the structure of the market, and then drill down to our trade levels, our targets, and our hypotheses for the day. My name is Doug McKay. I'm the founder of Quantum Leap Futures and the head moderator. This is a subscription room. If you're interested in checking us out, I'll put up my contact information in just 1 second. Before I do that, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, your own risk metrics. Okay, if you want to get a hold of me, send me an email to quantumleapfutures@gmail.com. You will need a Skype account. It is free to open up a Skype account and easy to do. Send me a contact request to Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Of course, if you want to see more of these videos, search on YouTube for Quantum Leap Futures. And if you like what I do, follow me on Twitter @Crazy2. This isn't a commercial venture, so there's no website, there's no blog. What we do here is done in the chat room and in the live go-to that you're currently listening to. Okay, so let's first of all get a couple things out of the way. We have rolled over in terms of the H contract to the M contract, so everything we talk about this morning is going to be on the June contract. There is enough liquidity in the June contract, and I have just gotten into the habit of rolling over and starting my morning on the June contract. Of course, we had the big news this morning. We had the European minimum bid rate. Draghi did cut the rates. They're offering a whole bunch of new quantitative easing. Draghi is speaking right now, so be careful. We also got the unemployment claims came out better than expected. Capacity utilization and NHPI for Canadians came out not too bad. Next big one will be at 10:30, natural gas, and then be careful this afternoon because we've got the 30-year bond auction at 1 p.m. Eastern, and then we've got federal budget balance at 2 p.m. So a fair amount of news. They have revalued this market. We had a big pop on the European bid rate news, and we are now trading in the 2000s on the March contract and in the 97 area on the June contract, and I'm expecting it to get very whippy on the open. Obviously, we've got rollover equalization to look at, as well as the June contract will likely come up to where the March contract is trading to equalize things out in the next coming days before quad witching next week. Remember, next week is quad witching, so it's going to be an interesting week as well. So yesterday we were looking for a rotational day. We had a neutral day the prior day, so we were looking for the possibility of a neutral day. We definitely had a inside day yesterday, very balanced. It was all about trading through the value and back to balance, and not really looking for breakout trades. But fairly balanced day. We've obviously broken out today. This is showing the March contract because that's my trade levels for yesterday, but we will be rolling over to June. So before I start, just going through, I'm going to take a quick look at where we are. I'm going to go back to the March contract just to take a look because I don't have as much information. Actually, I got to change this to the continuous contract. So we can take a look at where we are within the time frames. I use a 9 EMA and a 20 SMA. I'm looking for slope and separation and where we're challenging the trend. Obviously, we've had this long run up, and beginning of 2016, they've violated the trend. This is our first poke back up above the 9 EMA, and we're getting a positive month so far, and this could take us right back and then possibility see some continuation. So just keep that in mind. Going to the weekly has violated the downside trend that was starting. We've broken above the 9 and the 20, so we're in consolidation and pretty symmetrical pattern right here. So it'll be interesting if we hold and get continuation. On the daily, we are getting a upward trend, good slope and separation, so we are going back into a upward trend. We do have a naked cross up here at 2039.50, so just keep that in mind for the daily. Going to the intraday, the 4 hour, we've been in this consolidation, big pop on the news, broke the fractal high here. So, this is going to create a pretty big technical gap that's likely going to be closed by time or time and price. And on the 1 hour, you can see that we're getting this foobar Mr. Sneaky. And again, this could close because it's a news-related event. You've got to put context around a foobar Mr. Sneaky that is put in during a news event, because the market can get revalued, and we could close the gap through time, go sideways, and have the 9 EMA come up and meet us versus price, or a combination of both. On the 30-minute, we're coming down off of the foobar Mr. Sneaky, but again, probably not come all the way down to the 1999. It's possible, but likely to be somewhere in the middle, and close it by time and price. On the 15-minute, we are getting a move down to close the technical gap. All the smaller time frames have trends starting to the upside, except for the 5-minute that has come down. We had this beautiful foobar Mr. Sneaky, and a move back. Well, this wasn't a Mr. Sneaky, but we did get the foobar, and a move back. We're now below the 9 and the 20, so we are seeing some weakness come back in. I'm still running one contract that I re-entered short on the news. Okay, so taking a look at the structure. Now, the structure doesn't change, just the values. So now when we look at the microcomposites and the composite, all the values have been adjusted down to the June levels. So just to give context, we had the balance that we were in up here between 2086.50 and 2008, with the microcomposite key LVN right here at 2015.50. We fell out of that balance, tried to hold value right here at 78.75, couldn't, gap down again, created the balance zone down here with the value area high at 26.25 and low at 49.50. Accepted value just before the breakout at 14, broke out, held value at 39.75, gapped up. First 2 days of the gap up, we found value at 65, got continuation, tried to hold up here at 90.50, couldn't, came back down, and now the balance zone that we're in, and I can include this day as well, the microcomposite VPOC is 74.75. So currently right now we've moved up through the CLVN at 82.75 and the LVN at microcomposite LVN at 83.25, and we're currently back in where we tried to hold value the second 2 days after moving up in around this 90.50. Our key line in the sand above us is going to be this 94. If we get above 94, I'm looking for a run into the overnight high that we put in at 2001. 98 and a quarter will be the first target, and then 2001, and the next big target above is 2004. 2008 offers resistance, and then the next big resistance will be up here in the 2015-50 area. If we cannot hold the 90.50, look for them to move back towards this 87 and a quarter. You can use 89 as a area to short from into the 87 and a quarter, and then a move possibly down to the value area high of this 4-day microcomposite at 84 and a quarter, and the CLVN at 82.75. 82.75 is going to be our key line in the sand below. If we get below that, I'm looking for a move back towards the 77 and the 74.75. With possibly a move down into 71. Anything below 71, I'm looking for the bigger move back to where they first accepted value after the gap up and down at 65. The next big support level is down here at 58. If we get below 58, 50, then I'm looking for this to be the interim high and a bigger move back down towards the 40 and 43, 38 level. So that's taking a look at the bigger picture, moving over to our intraday chart, moving our levels over. So we have an overnight high of 2001. We have an overnight low at 77 and a quarter. Our VPOC shifted up on the news to 97. We have a LVN that we just broke through at 93.75. And it was really thin on the way up. The other LVN I'd be paying attention to is the 89 and a quarter, just below that gap. All right, so we don't need this. We can expand this. So we're going to open up outside of range, outside of value in a revalued market. We're up and around this this 90.50 area. 90.50 is our target below the 375. We've got a gap fill down here at 89.50. We have the LVN and support at 89. If we get below that, target 87. Currently, right now, we've got we're trading 1992.50, and our close from yesterday is at 1979.75. So our half gap fill is 1986 and a quarter. Okay, our gap currently right now, 92-ish, is about 12 and a quarter points. So it's, I think, I don't have the study open. I think it's got somewhere in around the 34% probability to close a gap. It's not above 15, so it's not as heavy as the 15, but again, we've got a big gap. I don't think you'll see the gap closed, but you never know. Below the 86 and a quarter target, we've got really nothing here till the 84 and a quarter. And below that, I'd be looking for a move down into the range high and that CLVN. Below that, look for the gap fill and a test of the 79.75. And if we get below the value overnight or below the value area high from yesterday, look for the overnight low to get taken out and a move down to the 75 and a quarter. This isn't my main hypothesis. My main hypothesis is to come down towards the half gap fill, find responsive buyers, and close this 89.50 gap, and then move back up through to the overnight VPOC and a test into the 2000s and a takeout of the overnight high. If we get below the 84 and a quarter, then I expect us to come back and test into yesterday's and look for the first bounce here at 79.75. If we don't bounce from there, I think we'll come right through value all the way down into the 73.75. Below 73.75, then I'd be looking for a move down to the range low, which is going to also be our key line in the sand. Anything below that, I think we start trending. We get a big down day and take back a lot of this with a move down back towards the 65. We got a naked VPOC there. Off of the the pop in 2001 high, our daily ATR, 20-day ATR is running at 30.80. That gives us a daily ATR downside target of 1970 and a quarter. So just below the, just above the range from yesterday, excuse me. And off of the bottom at 1977 and a quarter, our upside daily ATR target is 2008 and a quarter, so we have room to go in and test into the 2000s, and that's my main hypothesis. I'm either looking for a initiative buyers to step in and take us right up through into the test of the 2000 and the takeout of the overnight high, or I'm looking at two-sided trading, chop around here, come back down towards the half gap fill this gap at 89.50, close the naked VPOC, and bounce somewhere between 84.75 and 89, and then work our way back up and into the 2000s. Targets in the 2000s, so above 93.75 is actually going to be 94. I'm going to use the CLVN rather than Globex LVN. First target is the overnight VPOC at 97. We've got the range high, RTH range high at 98 and a quarter, but I think they'll go for that naked VPOC at 99. 2000 obviously going to be a trade level, but I'd be looking for our overnight high to get taken out and a move up into the 02, 75 gap fill, the CHVN at 04. And once we're in the 2000s, don't even think about shorting this until we get up towards the 2010. The overnight high that was put in the March contract is 2010 and a quarter. I'm going to move this to 2010 and a quarter. Our daily ATR is up there. And then above there, look for 1275. And then that 1550. This is our key line in the sand above. Above this, don't even think about shorting because we're going to have a bigger move and we're going to move up towards that 19. 1924. Come on. And 32.75. You got a gap fill. 32.75 target there and 43.75, which is our just above our weekly ATR target. And then above there, 45.75, which we already have as a target, so I don't need that. 49.75, and then 20.55, and the big target still up here is our composite VPOC up at 61.50. This composite VPOC is the most traded price going back to beginning of 2013. All right, so that's what I'm looking at. Again, I'm looking for either initiative buyers to take us up right on the open and test into the 2000s, or I'm looking to chop around, grind down towards the 86 to 84 level, find responsive buyers, and take us up into the 2000s. If we get below the 84 and a quarter, then I'm expecting to move down back towards the 75, 74 level and chop around inside yesterday's value. Anything below the value area low, look for them to go down and test the key line in the sand, take out the daily downside ATR target, and below 68.50, I'm looking for a trend day down towards the 65. All right, that's going to complete our pre-market session. I'm not going to do gold this morning because there's just too much going on. As always, trade well, trade safe, and we'll catch you on the flip side.